following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
Hello, everybody. This is Mark Longo from the Options Insider Radio Network, and I'm breaking into your regularly scheduled programming to let you know about an upcoming event that I think is going to interest quite a few of you. It's called The Future of Options Trading, Finding Edge Outside the Pit, and it's going to be held on November 5th here in Chicago. This is the inaugural conference from the Options Alliance, a new industry trade association that I am privileged to be a part of. And this conference will address the numerous issues facing the fastest growing segment of the options market, namely options entrepreneurs. So who is this event for? Well, if you're a current or former market maker and you're looking for some ways to leverage that unique skill set in some exciting new areas, well, then this event is for you. If you're an aspiring entrepreneur and you're hoping to learn a little bit more about the options market, which is the most dynamic segment of the financial marketplace, but also can be a little bit intimidating, well, then this event is for you. And if you or your firm are looking to expand the reach of your products or services by learning more about the unique needs of options entrepreneurs and new startups and new ventures, then this event is definitely for you. We've got a lot of great speakers lined up covering a wide array of topics, including how to leverage that trading and market making mindset and skill set into other unique opportunities, also overcoming the typical roadblocks and stumbling blocks that may lay in the path of a new option startup or entrepreneur, and of course, perhaps most importantly, how to promote and market that new option startup or new venture that you're planning. Now, I've been to my fair share of options conferences, so I could say with some certainty that there's never been an event quite like this. Take advantage of this unique opportunity to meet with and learn from the entrepreneurs who are out there doing it, building new businesses, starting exciting new ventures in the options market. You can learn more by surfing on over to www.optionsalliance.org and then clicking on the event sign-up tab at the bottom of the page. A lot of people say that their space is limited, but we really do mean it. So if this event interests you, reserve your seat today. Thanks for listening, and now I'll return you to your regularly scheduled program.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the world of the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call the old Options Insider Radio Network. And like I mentioned before, if you haven't checked out the Futures Options Roundtable, check it out, theoptionsinsider.com, iTunes, Stitcher, Aha Mobile, wherever you get your finer audio programs. That show should be up there. It's a great one. If you like this show and you're perhaps a little bit curious about the realm of futures and futures options, that's certainly the program for you. The Futures Options Roundtable. Check it out. And joining me on this roundtable for this program, we have our returning cast of characters. Starting off, seems like I'm talking to him 15 times a day now, all of a sudden. Good old Mark Sebastian from Swan Wealth Advisors and OptionPit.com. Mr. Sebastian, welcome back to the show, sir.
Hey, 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 hey! Ho!
Wow, someone had some Red Bull for lunch. Or just a lot of sugar. It is Halloween after all. Maybe you're dipping into the kid's stash.
I stopped at a couple of neighbors and ate a bunch of candy.
I've
actually gone diabetic in the last hour.
I can't say I blame you. All right, and also joining us, hopefully he's not dipping into the candy as well. Good old Alex Jacobson from Options Express. Mr. Viceroy, how you doing this fine afternoon, sir?
Good. Going trick-or-treating in the Viceroy head a little later. See if that gets me more candy.
You taking the grandkids out trick-or-treating?
The grandkids are still in vitro at this point. So.
Oh, I thought you had a grandkid already. Oh, so pre-grandkids then. You're getting ready for the grandkids.
Yeah. No, mine are in college or married. So I'm taking the dog at a big cauldron to see how much candy I can collect.
just collecting for your own personal use. I see where you're going with that. Yeah. I can't say I blame you.
I deny it, but it's really all for me.
You tell everybody you're collecting ahead of time for the grandchildren to come, but really it's for the personal use. And we'll be joined in a little bit by good old Uncle Mike Tusaw, who is busy working himself out of some post-Apple earnings spreads and trades. I'm sure he'll be very excited to share with us here on the show today. But while we're waiting for him, let's dive right on into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we break down the day's worth of action and activity in the broad market. And Alex, it was another one of those days where the script flipped, quite literally, actually. I'm looking here at the script that I wrote probably about an hour ago, talking about the mild rally that was going on across the street, and that script certainly flipped towards the end of the day, with most of the major indices closing down about 0.5% or so on the day. Right towards the end of the session there, it seemed to just turn to the dark side, and that was really... That wiped out all the green we had that was mostly on the board throughout most of the day. All of a sudden, all of that stuff being wiped out. But it has been an interesting week. A lot of interesting developments in the land of earnings. I'll save some of the fruit company talk until Mr. Tusaw is on board for us. But we also saw, maybe just in general, that the tone has been kind of interesting because we saw about a week ago or so everyone just talking about the power of premium buying through earnings, with Google just lighting it on fire last week. I think, in retrospect, actually, because Mark, we were talking last episode about, we were kind of scratching our heads about the strange little volatility skew we saw popping up on the front month there in Apple. Everyone was buying the guts, selling the wings. Not something you see very often in Apple, at least of late. And of course, as soon as the show finished, it kind of just clicked with me, and of course with Alex too. I was talking about it, that it clearly a lot of that had been post-Google. People saw the power of buying premium and were convinced for whatever reason that Apple had to follow suit. They
were smart, but they were potentially smart enough to hedge it off at the wings.
Yes.
Which is the key there, because if you hedged off the wings, you might have been able to salvage this trade. If you didn't, you lost. You got your shirt handed to you by Apple. And actually, Facebook ended up with a very similar formation going into earnings. So that was kind of the theme of the day.
Yeah, getting your face handed to you post earnings was certainly the theme. We saw Facebook exactly do kind of a similar narrative throughout the week from the big earnings announcements, where if you did the buy and hold through earnings type trade and didn't have any other types of hedges, then you certainly did have some issues, shall we say. In fact, I can always tell by the mail we get and from this show what's going on in the earnings season. And certainly whenever people start underperforming from a long premium perspective, we start getting the questions about after hours trading again. I see a few of them filtering in again today. So that's certainly maybe the earnings season isn't perhaps going the way a lot of people were planning here. But yeah, Facebook, another interesting one where they kind of came out, had some vacillations, and the next day really kind of moving quite a bit as well. But still a lot of after hours movement versus what we saw in the marketplace. So interesting ones. Did you see were a lot of the mentees and clients over there at Option Pit? What were they setting up for going into Facebook? Were they trying to pull an Apple and get long some premium and short the wings, or what were they doing out there?
I was pushing a lot of people into front spreads, because that was where I thought the money was. And in fact, that was where the money was. The trade that I really liked moving into earnings was expiring this week, the November 54-57 1x2 for a credit. Hindsight 2020, I probably would have brought a little closer, but today basically you can buy back your call. You could take it off for a penny credit, or if you want, buy back one of the calls for 2 cents and basically be long a call spread for a 22-cent credit. Worse things have happened.
You're talking a straight up NOV, not the weeklies, right?
It's straight NOV weekly. The weekly expiring on Friday. I was feeling really proud of myself yesterday when Facebook was 54 or 55. I was like, we're in the money, we're in the money. And then, obviously, then they mentioned the teenagers weren't as big of fans of Facebook anymore, and it was, you could actually hear, wah, wah, wah,
oh, jeez. Those
when
tweens.
the CFO said that.
Those tweens will get you every time.
Darn tweens. Would you pick a website and stick to it?
That's been kind of the narrative for all these social Web 2.0 type companies all along, is that their audience is so fickle. Granted, Facebook has carved out a niche with a little bit more stable audience, the housewives and moms who seem to use it quite regularly, but all the newcomers, all the little guys, they're already off to God knows what the next thing is for them.
And the funny thing is, if you look at Tumblr is basically what we had when the internet first came out in 1994.
Yeah, I don't get Tumblr at all. That's another one. That's a story for another day. Talk about retrograde in just about every way.
I mean, there's nothing to it. It's not even a website. All it is it's a bunch of pictures. That's the way the internet was before we had fast enough internet that you could look at video. It's like Tumblr, circa 14.4 modem.
The days.
The narrative all day today was just what you said, that Facebook is becoming the mom and dad and geezer site, and that's kind of a strange irony in the social networking world. But you pause for a minute and say to yourself, I'm not a teenager, I'm 60, and how often do I go to Facebook? And the answer is frequently. Yeah, it has definitely become a resource, and I get when my kids may drop off it for something more timely. In fact, my youngest, who's away at college, she was telling us the other day that she was texting. She dropped her phone, hit herself in the face. She was texting to a group that was in her dorm room. That's what it's become at that level. But it just curious, because the narrative all day was Facebook is the site for kind of the older crowd, which is a sea change, and it tells you about the adoption rate of social media.
And that's kind of been the secret sauce for Facebook for a long time, that they were loath to admit that their core of their audience were adult women, essentially, the quote-unquote housewives type crowd who were in there, using it. It took the place of a lot of the old things, like whatever, scrapbooking or journaling or what the other things they used to do are all kind of, Facebook consumed all of that. And so it became kind of the go-to platform. And they never really liked to address that much publicly, but that was a lot of their audience. And now, of course, maybe that's turning off some of the newer users out there. All right, and listeners, now we are joined better late than never by good old Uncle Mike Tusaw, a man who certainly had his hands full this week. Let's dial the clock back a couple of trading sessions, Uncle Mike, and getting into the big Apple announcement. Because we were recording live when the announcement came out, it seemed like we were going to have some decent overnight movement. It kind of retraced quite a bit in the after hours, and it seemed like the premium buyers ended up taking it on the short end of the stick there. What was your take on the earnings and the developments coming out of them, and what did you trade? You said you were looking at some time spreads coming out of them. What did you end up putting on?
Yeah, it was interesting. It's the exciting road to nowhere. I remember when we were going through it and just watching, I think it was 529 is what it was going into the close on Monday. And then it got as low as around 510 after hours. And I think the next day it got back up to 530 something. And on Tuesday, and this, I'm just basing this all on price movement, position going into earnings, long-term holding in Apple, and then a long-term hedge at the 460 April level. And so we're long stock, long a put, and then you were so disappointed in me for not having something more interesting than that. But what we did is on Tuesday when Apple went down to around the 520 level, that was the time that we decided to get back in, and I had one of my once every 2 year style trades eventually happen. That was a lot of fun. Since we had a pretty wide gap between the or the put strike price and where the price of the underlying actually was, what we've been doing since 430 on the way up, 430 is where we got back into this, on the way up was selling put spreads, verticals, and that's kind of been just like a way of financing the long put. And so this week, what we decided to do on Tuesday, we've actually been doing this for the last couple of weeks, is because of the wider gap than what we usually have, we sold a bearish we bought a bearish put calendar spread. And the reason for that is that we still wanted to use the theta in that to help finance the long-term time decay in the long put. So overall, the trade, I would say, if you combine the stock, the long-term protective put along with the calendar put spread, theta's about zero on the trade. Sometimes a little bit high, sometimes a little bit above it, sometimes a little bit below it. So immediately after I got into a 510 November week 1, November week monthly 510 put spread, what we did, and the ratio that we're using is for every I'm trying to think the best way of putting this. For every 1,600 shares that we're long, we are using a 10-lot put spread to establish this neutral theta. And so with that, when we put on a 10-lot 510 put spread, Apple just started going down. And the goal for the put spread was to try to get approximately a $1 profit from it. And the plan was to have it happen with time decay. And if it goes up a little bit, it won't hurt us quite as badly because of the fact that we have our long-term hedge so far away. Well, sure enough, Apple started going down like the second after I put on that put spread. And when that happened, I said, well, what the heck? I'll put in a limit order to see if we can get filled for a $1 profit right now. And sure enough, Apple went down probably about $5. And we ended up getting 1 week's worth of profit in about 30 minutes. So that's something that, for all you home gamers out there, if that happens to you the first couple times that you trade, it doesn't happen often. And to me, I average a trade like that about once every 2 or 3 years when I get lucky. So with that, recently, yesterday, we reestablished another 510 put spread, same concept. And we're ahead on it right now, but it's just mostly because of time decay. Now we're doing the November week 5s that we're long, and we're short the November week 2s. So basically that's what's going on with it at this point. And if Apple goes up, then we'll take our losses on the puts, but we'll be happy with the gains on the stock.
That's the old story. We got a hedge and it's just sitting around, and if you don't do anything with it, then it's kind of a useless hedge. So you took the money and ran, quite literally. Maybe you walked fast. I don't know. I wasn't there when you did it, but you took the hedge off the table. You never get angry about taking some profits and taking them off the table. And I know you were saying this earlier, and it played out in that little narrative there as well. It seems like the new listing of the weeklies, the whole monthly strip, has really changed the way you've been trading.
In a major way. It's one that, because the first run up that we had with Apple, I had on every ratio known to man, I'm convinced, with the monthlies. But what these weeklies have enabled me to do, I kind of did play a little bit with some weekly covered calls when we didn't have these 1 week, 2 week, 3 week options. But for the most part, I had to do a lot of ratio back spreads on it because I learned very quickly if you try and sell covered calls against Apple when it's going from 400 to 700 in a very rapid time frame, that's a losing battle. You have to find other ways to finance your puts. So with these weeklies, the way with which they work, you can take very small amounts of money, relatively speaking. Just to give you an idea of it, I have probably less than 1% of the overall position dedicated to achieving this time decay. and you're getting a lot of theta. Now, you got to be wary of that because you got to make sure that you can fight well against the gamma monster when he comes to town. But you're enabled to do that if you're using these weeklies as part of an overall puzzle and not just the, I'm going to sell a credit spread the day before expiration and make my 2% or whatever.
You know, we talked about this last show. Joe, before he left the firm, did a study of weekly premium sales in the SPX as opposed to monthly premium sales in the SPX, and this was X transactions cost. So I get weeklies would generate more transactions costs, but in the past 12-month period where we've had a directional market, this was selling premium one standard deviation out of the money, comparing the weeklies to the monthlies, and this is a debate we have all the time. If you based all your trading on the Greeks, you'd say I'd always want to sell the weeklies. I'd get more erosion. Turns out the monthlies gave 4 times the return of the weeklies. And the issue wasn't the way they eroded. It wasn't the Greeks question. It was the histogram of the payoffs in a directional market. So it was kind of interesting because I sat through this presentation and, 80, 90 people on the presentation, when asked the question, which did better, popped up and said weeklies. And the monthlies outperformed by a factor of 4, but it was a specific period of time. It was this year, and it was X transactions costs. So obviously weeklies would have a lot more transactions costs. But I do think a lot of people are coming to the weekly market answering the Greeks theta question and saying the theta is better, and not giving enough thought to the how it ends question. So I think it's interesting when we talk about the weeklies to give some thought to not only the theta, but the payoff.
That totally, I can see how that would happen. What I've tried in years past, before we had the 1 week, 2 week, 3 week weeklies, I could never quite get any rhythm trying to trade the weeklies, because if you're wrong, then you got to go from 1 week to a month, basically. Unless it's Thursday, then you can go to the next week. And I would just bang my head against the wall trying to make something out of the weeklies, and I would just stay away from them. And what I've found, or and granted, this is only 10 months of doing this, but in the last 10 months, the fact that you have the ability to adjust between 1 week and 2 week and use the calendar in a shorter time frame, it gives you the ability to manage the gamma and the vega risk, even, and still somewhat take advantage of the theta.
Now, I'd like to see that full study that Joe put out there, Alex, one of these days. Maybe we can discuss it even in more detail, because there surprisingly hasn't been a lot of data on that stuff. The only study I've seen that incorporates, the new weeklies into any sort of, premium harvesting type study was something Russell did, I believe was on the collars. It might have been like a year or so ago. I think I talked about it on this show.
Yeah.
And that was an interesting one. And they showed kind of exactly what you would expect from these types of strategies. The closer you got to, that 1 day option, so the premium harvesting would increase from monthly to weekly to all the way up. It was kind of exactly in line with what I thought. So, that other study you guys are talking about is interesting because it is outside of the norm of what you'd expect.
Yeah, and the point I'm trying to make is sometimes the answer is not in the Greeks, and I think sometimes we as option folks tend to rush to the Greeks. And you could say, look, in a simulation, if I had the choice of selling 1 week, 1 month, or 1 year, it's easy to say I would, if income per period was my objective, I would never sell a long dated option. And we all shake our heads and we say yes. And then you look at the payoff histograms over time, and you find that there are periods you go through where the correct answer isn't about the Greeks. The Greeks help you set your expectation. I'm not arguing that. Just sometimes you have to think about what you think possible payoffs or possible risks are and how frequently they will occur. And it makes the equation interesting.
It's funny you mentioned the Greeks and the Black-Scholes equation. I'll have to clue you in a little conversation I've been having recently, Alex, with your little buddy Don Schlesinger there about the very controversial third definition of delta, and if it does indeed foretell the probability of an option expiring in the money or not. There's a lot of interesting research on that. Maybe we'll save that for another day. We probably could fill a whole show with the mathematical nuances behind that.
That's a whole show.
I can tell you what I was taught. I was taught is it's too high. It's a little bit too high.
Yeah, I guess it depends really on the period you're looking at, but it can be all kinds of off. And I've always kind of forgiven it because I thought, at the very least it was good for retail to think that way because maybe it would stop them from buying a 20 delta put, or I'm sorry, a 20 delta call. But it doesn't seem to work that way. So c'est la vie. All right, and that's going to do it for the old trading block, and now we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, that funky tune means it's time for the Odd Block. If you want to play the home game, surf on over to theoptionsinsider.com where you could read all of these alerts in much more detail, including a lot of the alerts we just don't have time to get to on the show today. We're going to kick things off with, I believe, a newcomer to the old Odd Block. This is Ultrashort Euro ProShares, ticker symbol EUO. UO. This one closing today, $17.59, up about 39 cents, or about 2.5% on the day. This is the name that's not typically lighting up the old tape, doing about 700 contracts a day, doing about 5,500 today, so a substantial bump up in ADV for UO, and pretty much all of that, almost all of that, coming in one substantial series of trades here on the Jan 18 put strike. We saw the day started off with paper blasting out about 1,100 of these Jan 18 puts for 70 cents. That volume continued throughout the day until by the end of the session, we saw nearly 4,600 of these puts going up for prices around that same level. Open interest only about 450 contracts, so this is a sizable amount of opening paper. Even with all this selling activity on the strike, we're still seeing a little bit of a pop here in IV. So interesting trading here. Looks like someone maybe drawing a sizable line in the sand here on the 18 strike, which is curiously an in the money strike. Senior Sebastian, what's your take here?
Yeah, I mean, I think it's a smart way. If you really think the euro is going to take a dive, or even ease off, and you've got like some contango work in your favor. This is a pretty smart way of actually having some limited downside liability, unlike something like a short call. So, if you're looking to sell vol and sell the euro, this isn't a bad way to do it. I kind of like it.
Certainly an interesting one. What does Mark Jr. have to say about that?
Mark Jr. has palms out for the euro.
I always like to go with what he says. He's quite
he says palms out.
Quite the market prognosticator there, little Mark Jr. All right, moving on to another newcomer here on the old Odd Block. This is Tile Shop Holdings Inc., ticker symbol TTS. Having not the best day today, down about 6.6% to close at $22.33. This is the name that does a whopping 170 contracts a day. And they, not surprisingly, given the underlying volume, were lighting up again today as well, doing about 3,000 contracts today. About half of that coming in a bunch of trades, lighting up the Nove 22 halves. We saw the day opened with paper coming in selling these calls for $1, only pretty small, about 300 times, with an open interest of about 1,000. The trade actually went up as one block in the session, starting off pretty early with about 1,600 contracts going up in this block for prices around 50 cents. And so it's an interesting trade. We saw some other scattered paper throughout the day with about 1,625 or so going up total on the day here on this strike. And Senior Sebastian, We haven't really talked about shop holdings here on the show in the past. What do you think about this block of call selling going up here?
I'm more familiar with wall-to-wall carpeting shop holdings, not as familiar with tile shop.
I mean, you're not active in the tile segment. I know Chico's is your thing. Do they do any tile at Chico's?
No, if they sold women's clothing, I'd be all over it, but they don't.
Now, this was like Chico's or what's the other? Red Lobster. You'd be all over that as well.
Yeah, yes. So, I don't know. This is one of those little random. There's probably one player in it. It's a trade by appointment stock, and there you have it.
Well, speaking of another little one, not exactly as little as some of our other odd block specials, but a cheapie. This is Fortress Investment Group, ticker symbol FIG. Closing today, $8.25, down about 4% on the day. This is the name that does about 1,000 contracts a day, doing about 17,000 today. And the bulk of that trading coming up in a couple of trades, actually. We saw the March 8 calls going up today, with paper trading about 4,000 of these for prices around 75 to 90 cents. We're seeing open interest of a little over 1,000 contracts on that strike. Went up in blocks throughout the session. We also saw, at the same time they were trading those March 8s, we also saw a bunch of closing paper here on the Nov 8 strike. So perhaps someone closing here in Nov and rolling out to some smaller size out to March. We saw the Nov 8s going up about 11,000 times as well on open interest, coincidentally, of about 11,000 contracts for prices in like the 30 to 45 cents range. So, Senior Sebastian, think they're rolling on out to March?
Maybe, or maybe somebody saw it and thought it was one thing and traded against it. It could be just somebody misinterpreting or not paying attention. So you just never know with these little cheapy stocks exactly what's going on.
That's why we love cheapy stops here on the old odd block, because no one knows what's going on. That's part of the fun. Finishing up the old odd block today, we have APO. This is Apollo Global Management, ticker symbol APO, closing today at about 32.25, roughly unched on the day. This is the name that does about 1,500 contracts a day, doing over 10,000 today, with the bulk of this volume going up in pretty much one size vertical. We saw the Nov 30 32.5 call spread going up for $1.50. 5,000 times, hence the 10,000 contracts total on the day. Open interest on these strikes are about 900, about 1,000, and about 5,000 respectively. So the volume went up in pretty much some large blocks. Looks like someone's rolling down. They're selling to close on the 32 halves, hence the matching of the open interest up there, and then it's rolling down to the 30s. 5,000 times. Interesting, given, of course, this name has sold off a little bit lately, so this guy could be just adjusting down. The name is trading right around that 32.5 strike right now. He might want a little bit more cushion, a little bit more meat on the bones there, so he's rolling them down to the 30s. Last chance, Senior Sebastian, do you watch the Apollo Global Management? I know when I start my day, I can't start without getting my ticks on APO.
Yeah, I'm a big fan of APO. This could be just somebody rolling down. I don't think it's anything that, somebody taking some money in or something like that. I don't think it's repositioning. I don't think this is anything to be, really crazy about.
Oh, too late. I'm going crazy over here. We're all crazy here on the old Odd Block. Unfortunately, that's all the time we have here for the Odd Block. And now we're going to keep on rolling right on into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, Mr. Alex, been a busy week. We saw Apple lighten up the tape earlier, then Facebook, the two retail favorites. I'm sure there were commensurately busy days over there at OX as well. So take us behind the scenes. What was going on? What was lighting up the old tape? What were the OX customers up to this week?
That's exactly the path I was going to go down. And Facebook displaced Apple here. Our 5 most active are normally SPX, SPY, Apple, and then it kind of gets into a mix. Today, the 5 most active here were SPX, SPY, Facebook, Apple, the Russell. But an interesting most active is the market vectors gold miners showed up as number 6 on the list here. And one thing I observed, and one thing that's been happening a lot lately, is the GLD has fallen off in terms of actual volume being done. It's dropped out of the top 10. In fact, it's almost dropped out of the top 20. And SLV is now trading more actively in our population here at OX than GLD, which is another flip. But it was a great month. I mean, October market was up 4.5%. That's going to go down as, I believe, one of the biggest Octobers in history. And Octobers, as we all know in the options industry, have had some really exciting days and weeks in them. Market was quiet until the end. We talked about that at the beginning of the show, where, I write my notes, and then in the last 10 minutes, I tear them up, curse, and start over. Relatively quiet day today until the end, and then the sell-off. And, of course, anytime you sell off, we see our SPX, Spider, and our VIX volume pop. VIX volume is now in the top 10 here at OX. And, normally I would have said a quiet day, but it was busy in the morning, and a lot of that was Facebook and General Motors and Avon all coming off earnings. Little quiet midday and then busy in the afternoon. And in the sell-off, we saw a pop in, as I said, the hedging instruments. So all around an interesting day.
Mr. Tusaw, does that kind of jive with what you've been doing, what you've been seeing over there as well? Do you find yourself maybe sliding a little more activity out of GLD into SLV? Or are you kind of playing wait and see in the silver land these days?
No, I'm still pretty balanced at this point. Typically, I have a similar view in that silver is going to be, if metals go up, I believe that silver is going to go up at a more rapid pace than gold, and vice versa, should they go down in terms of percentage. I'm still in both of them and just kind of using them both as a way with which to have exposure to metals. So trying to stick to both of them. As tempting as it is to just put everything into silver, I don't think that would be prudent for what we're trying to do and accomplish in the metals.
Of course, I don't want to gloss over that other fact you highlighted there, Alex, that this is the most active October on record for OX. That's actually surprising because October is no small month. If there's any month that has experienced its share, perhaps more than its share, of volatility and records and all sorts of Sturm and Drang, it is October. And yet this month with Apple and Facebook put it on the records for OX, huh?
Yeah, and plus you had a good market. I mean, market being up over 4%, you at that point get a lot of rotation. Our customers more transactional, and we have these discussions up here all the time, Schwab versus OX, and I don't want to, kind of put a line in the sand and say the Schwab customer is more of an investor and the OX customer is more of a trader, because as soon as I say that, I get proved wrong. But having a good month is really a terrific tailwind in terms of the business that gets done, but also having Google, Apple, Facebook earnings in terms of our customer, that's a big driver.
Of course, a little thing like the government shutdown coming at the beginning of the month and shooting some vol into the marketplace probably didn't hurt as well. Of course, it probably kept some people on the sidelines as well. Some people got a little too scared to play, but the OX customer, a little bit more savvy, a little more sophisticated, that's the kind of market that actually favors them. So that combined with the big three reporting certainly doesn't hurt. We're going to miss Tesla won't fall in the October range. Otherwise, God knows what kind of numbers you guys would have been putting up over there for this month. But more about that in the Around Block. Thank you for that, Mr. Alex. Now we're going to keep on rolling right on into the old mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block
All right, and welcome to the mail block. This is, of course, the portion of the show where you guys get to chime in and sound off. I had to say you guys are really stepping up to the plate here on the question front. We are drowning in questions, which is a good problem to have. Keep it up. I love it. Some of you guys even taking advantage of the opportunity to send in a couple of questions. Can't guarantee we'll get to all of them on every show, but maybe we'll hold some in reserve or answer the most salient ones. But keep it up. I love the questions, all kinds of questions from all over the globe. I have to apologize to the guy who wrote in about Greek warrants from Athens. That's really not our purview here on the show. You had some great and some detailed stuff to back up your thesis that they were underpriced, but we just don't get into warrants on a regular basis. Maybe that's grounds for a future show. Maybe there's a new show on the network lurking in the international warrant scene, but warrants just not a big player over here in the States, so we don't really do a lot with them here on this show. But who knows? Maybe we'll need to take a second look at that down the road. But keep those great questions coming. Starting off, we have a question from Mr. Herb Slojewski. I guess I'm pronouncing that right. He writes, where can I get info on how to trade Twitter options? What sort of plans do you have for Twitter when it starts trading? Thanks. And the reason I wanted to put this one in is we got a lot of variations on this question over the past week or so. As you might imagine, a lot of people writing in saying, how can I get in on the action on Twitter during the IPO using options? Our answer is always the same. You can't. The options are typically delayed for at least a few days, if not a few weeks or even months after the IPO for a variety of reasons. You can imagine if you're a market maker, you kind of want to know where the underlying is before you start making markets into things and before they become actually optionable. I know the IPO is on the 7th. Alex, is there an optionable date yet? Have they announced it yet for Twitter?
I am not aware, and it's under prospectus, so we all have to be a bit careful. But the issue, just so listeners will kind of get it, is the option requirement requires a certain number of non-related holders. So you don't know for a couple days if the thing is going to be eligible. The other issue is it will be hard to borrow at the beginning, which is no joy for anybody. It'll make for vastly expensive puts, and probably the only market-making firms that'll really be able to possibly create liquidity in the early days will be the underwriters, because they'll have the stock sitting with their customers. So it's going to be a while. How long of a while is dependent on stuff we simply don't know at this point.
Yeah, and we get these every time, with the Facebook IPO and all the other. Every time there's a big IPO, people want to know how they can play it. I think he had to send a follow-up later. He wanted to buy $10,000 worth of calls. How could he do that? And I kind of had to walk him through the fact that he can't. But we love these questions. Keep them up. What sort of plans do we have for Twitter when it starts trading? That's a big. We have to wait to see if it starts trading first.
Buy as many calls as you can.
Yes, that always works. Always works. When in doubt, buy all that you see. This could be another Facebook where it sets off and starts shooting north on the opening day and then immediately retraces. So obviously we have to kind of see where the narrative plays out on these names. I've never been a big dive into the IPO frenzy anyway myself. It's kind of just, obviously, A, because I'm an option guy and they don't trade, and then B, because it's so much fluff and so much nonsense, and, the iBanker supporting certain levels in these names, and it's just so much fake trading going on that IPO that it's kind of hard to really get a sense of what actually is going on, what the actual value of the stock is. So, great question, Herb, and everyone else who wrote in with that particular question. Thanks. But yeah, Twitter, unfortunately, not optionable yet, and the fact that we don't have a date means it's going to be a little while. So look at previous IPOs, see how long it took. Usually it's probably within a week or two. That seems to be a reasonable amount of time. Sometimes a little bit faster. But that seems to be, sometimes it's longer. I've seen some names go for, if they're a little bit less liquid, they can be a couple of months before they become optionable. So hold your horses and you'll get here. Next question is from Mr. BillyMo. I believe he's been on the program before. He wrote, question for the mailbag, and this is, you could tell how the earnings season is going from the questions, like I said before. As I sit here watching Apple go from down 25 to green, is there any updates, or are there any updates on after-hours options trading? Alex, I know you and I, this is one of our favorite topics. Unfortunately, as far as I'm aware, I haven't seen any movement in this area since last we had the heated debate on this show. Have you seen any progress, yay or nay, in this category since the last time we talked about it?
Nothing. And what I'll use the term frightens me is the bozos in Washington will get involved in this in the current regulatory environment. I'm probably already in trouble for calling Washington bozos, but I'm afraid what you'll see coming out of Washington, because this is chat that's going around, is they won't let companies release after hours. They'll make them release pre-opening. And I just don't think that that's a regulation that's coming to the marketplace. But no exchanges are doing it. I urge the first exchange to do it. But, of course, then everybody will do it and clone it. But no conversation about after hours lately.
And, of course, events like Google tend to play out for the other narrative. Google was a huge home run if you bought premium and just held it through the earnings. So every now and then is one of those massive home runs that seems to lay aside the fears people have about after-hours trading. Of course, then we have an Apple and a Facebook that follows right immediately on the heels of it that gets everyone kind of interested in it again. And I still think there's some room to move on that and to allow people like you to be able to actually trade long premium and actually be a little bit more effective with their trading, or indeed close out shorts if they're worried. But I think there is room for a little bit more liquidity, whether it's before or after or how that shapes up. I don't know. But yeah, I'm with you, Billy, but I don't see any movement anytime soon. All right, Alex, put your thinking cap on. You too, Mr. Teesaw. Here's one. They mention you specifically, Alex, so I'll let you take the first stab at this one. This was another multi-part question. We'll only get to one part of them. Our show's only an hour, guys, so we can't get to your 3 or 4 part questions in one show. This is a question from Mr. Richard D. He posted it on the old website. He says, Mark and the Brain Trust, I have 2 more questions for the queue. Well, he's referring to his other questions that we'll discuss maybe on another show, another day. He writes, I happen to be the temporarily happy holder of a bullish Facebook diagonal Nova week 2 50 call, which I believe with the monthly Nove 55 call. So we had a diagonal 50-55 call spread there that I held through earnings. As I watched the stock very quickly balloon almost 10% to around $54 and change, I thought about what I could do in the after hours to lock in any of this gain, knowing that it could likely disappear by morning. And he wrote in parentheses, yes, Alex, I love your pressing for evening and after-hour trading hours in all instruments. Again, the after hours theme rearing his ugly head again. If I just owned the call, which I don't due to the vol crush, I could have shorted the stock, but alas, I had a spread with a short in it. I was wondering if there are any options that don't leave me naked any stock to capture any of this after-hours gain. I suspect not, but I figured I'd ask because this has been a topic on your show. I also wasn't sure if there was a different way to structure the trade to begin with that would have afforded me some after-hour opportunities with something other than a vertical or bullish time spread like I already have. Oddly enough, my broker does not count owning a call as a hedge against a short stock position and gives me the full margin position of the short without the hedged call. So even a call/short stock after hours move wouldn't work for me as a synthetic short put. Thanks. Is this common? Thank you. Maybe we'll start with the second part first there. Yes, that is common. That's, of course, what we've talked about a lot of times on this show. Unless you have a very substantial account, you don't get a lot of that favorable margin treatment, that portfolio margin we talked about a lot, which would take into account offsetting positions like that. So if you don't have that, hit that 100,000 threshold or so on that particular trading account, then you're going to have that sort of full margin treatment, which you're right is not exactly favorable for a situation like that. And it is common. Most brokers are going to do that if you're below that 100,000 level. Of course, you're getting margined for the full of it, but you still would get some benefits if you had, let's say you had, what were we talking about? Let's say you had that long call and then it rallied and you did take the short stock to ride it down and lock some of it in. Indeed, you're paying some of that full margin again on that position, but it's better than nothing. In retrospect, if you're looking to lock something in. Mr. Alex, where do you want to start in? I'll give you first crack since this is aimed at you.
Yeah, you've covered it. I have no wisdom. I mean, the only thing you can do is short some stock, but to the listener's point, he had a spread against it. Maybe I'd short a little bit of, let's say I owned 10 calls and they were deep, so I had 100 delta. Maybe I'd short 50 or 60 shares of stock and then try to cover it in the early morning after the stock reopens. But to the listener's point, a lot of our listeners don't have a lot of extra margin sitting in their account. They're not going to get preferential treatment. I mean, it's nice when we talk about portfolio margining, but I'm going to get in trouble for this comment, but here we go again. I doubt there are 1,000 portfolio margining accounts in the United States, and I know I'll get emailed tomorrow that someone's going to tell me they're 1,143 and I'm a moron. It's just tough for an individual investor, and the exchanges need to do something. And now that we've all agreed, it still won't happen.
Mr. Tucson, what's your take here for our friend Richard D?
The first thing that comes to my mind is, and I guess this shows how popular they are, I don't even know if they exist anymore. Are single stock futures still even around?
Yeah, One Chicago still exists. They're not doing much volume, but they do exist.
Because my thought is, if I were them, then maybe I would open up after hours trading on single stock futures, and that might be a way with which to get some volume going on stocks like that. So I'm not sure on that. That's the only thing I can think of. But to answer the listener's question, yeah, it's a difficult spot to be in when you have a gain locked in. There's really nothing you can do about it. And then all of a sudden, the next day, it's back to where it was once they find out that the teenagers don't like it anymore.
Yeah, I think Alex's point is a good one. People need to keep in mind that they don't need to hedge the full thing. They can trade on a delta neutral basis or just hedge a portion of it. If you're kind of worried about it, you're worried about the margin requirements your broker is going to have you put down for that trade, then you don't trade. Let's say you have a 10 lot. You don't trade, the full amount of it. Maybe you hedge half of it. You hedge half the delta. That's usually a reasonable approach to take on things like pin risk and other things like that. You hedge half of it and you see how it unfolds. And that's a better way to keep some of the money as opposed to all of it. But you're doing the right things. You're doing risk mitigated for the most part types of trades. Verticals are the other way I would say to do it, and you're already kind of doing that as well. So yeah, there's not much else you can do with the current restrictions we have right now in lieu of just writing some stock. And if you don't have the margin to do it or don't have the capital in your account to do it, then you're kind of in the same boat as a lot of our other listeners out there, unfortunately, that you kind of have to just hope and pray that your position works out, or do what we've advocated on the show quite a bit, which is take advantage of some of that free gamma and free theta in the weeks leading up to the earnings event, and then just close it out. Google notwithstanding, you would have done all right this earnings season if you took that approach. You took advantage of some of the free gamma you get going in the week or so leading up to, let's say, an Apple or a Facebook underlying moves around a little bit. Maybe you get a few gamma scalps in. Maybe you just buy a nice spread and close it off for a decent little profit. You take your money and you go and look at the next trade. And you don't have to worry about all of the madness that is after hours trading around earnings. So if you're growing frustrated with this, and I could easily see why you would be, then maybe that's an approach you may want to favor as well going forward, is to take the free gamma, take the free theta, take a shot. If it works, not bad. If it doesn't work, no big deal. You haven't really lost anything, and you can move on to the next thing, and you're not left wringing your hands here at 4 or 5 o'clock saying, oh gee, what do I do? How do I lock in this winner? Because there's nothing worse than having a winner and then seeing it just erode to nothing and you can't do anything about it. That's probably the most frustrating scenario to be in. So we feel your pain, Mr. Richard, but unfortunately, aside from those options, there really isn't much else you can do. And there's a lot of other questions from you guys, including multiple questions from several of you. Maybe we'll have to table those for another time, but keep those questions coming in. We'd love to hear from you. And now it's time to roll on into our final segment, Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, where we take a glimpse into the crystal ball and tell you what we're watching for the rest of this week into the weekend and early next week. And coming up on the earnings front, it's pretty much exchange week next week. We've got the SIBO reporting on the 1st before the open, and then the CME reporting on the 4th next week before the open. So if you're trading out there in the exchange land, and a lot of you probably are, then you want to keep an eye on those dates. On the 5th, though, I know you guys at OX, Alex, you'll be waiting with bated breath for the 5th, because that is the other in that trifecta of just retail madness stocks, Tesla reporting on the 5th. Tesla actually taken on the chin over the last few sessions, closing today at about 159. So having given up some of the loftier heights over into like the what did they get? They got up into the 190 range for a while there. So given some of that up, it's not quite the straight up trajectory it has been of late. Be interesting to see how that plays out going into earnings. We'll have another show between now and then, so we could chat about that. Then of course another name we used to tease. Mr. Grigas about mercilessly on the show. He's the last laugher on this one. Groupon reporting on the 7th, closing today, $9.14. So the days of laughing at him when it was in the $3 range are a distant memory. Activision, Andrew isn't here, but I know he loves the gaming sector. They're also reporting on the 6th. Like I said, that used to be one of my favorite premium rights of all time. Has since entered a new phase where it is not exactly the reliable premium sell that it once was. So interesting to watch this one, how it plays out post-earnings. What are you guys in particular watching? Starting out with you, Uncle Mike Tusaw.
Well, I think you pretty much said it right there. I'm curious to see how things react based on what the Fed did this week. Want to see if we can maybe make some new all-time highs in the S&P again, or see if we're at a pullback. One thing that I always caution people of is at this level, there's never been a better time in the history of the entire stock market to sell, well, except for maybe a couple days ago when it was a little bit higher. But my point is that we're at very high levels right now, and I am bullish on the market, but I'm being very cautious at this stage, folks, and there's some good premium to be bought out there to protect yourself. And if you have some gains, I'd encourage you to do similar things as well.
You must be pretty short some stock right about now, because you've been selling quite a bit over the past couple of months.
No, I'm not. I'm actually just rolling up premium.
Ah, there we go. Just selling the premium and living the dreamium.
Rolling up long premium.
Yes. Buying the preem
and letting the underlying live you the dream.
There we go. The other side of that beaten to death coin. Mr. Alex, what's catching your eye for the rest of this week into the weekend, sir?
I think we've covered a lot of it. I think Mike makes a good point, and I think people should start thinking about end of year coming into November. If you've got some good gains and you've got some a few pigs left in the portfolio, maybe some match selling to realize the gains and then offset them with the pigs in the portfolio. I know I did talk to Grigas today, and he said he's having the Groupon stock symbol tiled into the bottom of his pool at the new house. Groupon apparently paid for the house and the pool. Grigas is about to come over and throw something at me. But I still worry about the dysfunction in Washington. And you know, even though we're behind kind of this first leg of everything that could have gone wrong, we clearly demonstrated to the world that we're dysfunctional, and I'm concerned we will remain dysfunctional. And there's still a lot to be done. You got a Fed nominee coming up. Eventually, you're going to have to address the kicking the can down the road of the debt ceiling. So keeping an eye on the 10-year. As I've talked about in the past, I didn't want to see it above 3. I thought that was a bad sign, and ironically now, a couple months later, I'm worried about it dropping below 2.5. So that's kind of a worrisome indicator. And Mark, you and Mike covered earnings pretty well this week, so that's what we're watching here.
All right, that is going to do it for us here on the old program. But before we go, as usual, let me check in with my cohorts here, my partners in crime, to see what's cooking in their respective necks of the woods. Starting off with you, Mr. Tusaw, what's cooking? How did the old RCM pre-Halloween webinar go?
Oh, it was very exciting. A lot of people came, and it was a great event. What we're going to be doing on our website, we're going to have a big archived. We're currently working on getting the archived webinar section up on our website, so it will be up. We have heard the cries of the masses, so keep posted to our site for that. And also, we have another webinar coming up on the night of the 6th. We'll be doing it on Wednesday again this coming week. We're going to have a guest from the Horton Group. He's going to talk to us about Obamacare. We look to try and find the best expert that we can on the subject, and we feel we found him, and we're excited about it, just because of the fact that obviously it has nothing to do with options, but it does have something to do that's going to affect almost every American in one way, shape, or form. So tune in.
All right. Thank you for that, sir. Mr. Alex, what is cooking in the land of OX?
So Monday the 4th, a couple webinars I'll showcase. We're doing a webinar talking about gamma and how important it is to understand it. A little after that, we're doing a webinar on short calls and how they can be applied and where they fit into a portfolio. The 5th, Jim Wyckoff, well-known writer of the Wyckoff Letter, will be doing his monthly futures overview. We have that at the beginning of every month out here for our futures customers. And just a reminder that still continue to offer the $150 Amazon gift card with a funded account and 10 trades in 90 days. We've talked about this a little bit, Mike and I, about the level of new account opening, and it continues to be at a frenzied pace. So I'm not sure what that indicates, but we're busy up here.
Hey, there are worse things than a flurry of new accounts, sir.
Absolutely.
All right, and Mr. Sebastian had to run. I think he had some previous trick-or-treating obligations to attend to. But let me just say for him, and of course for us here on the Options Insider, mark your calendars for December 7th. We are bringing back the Options Insider Educational Series. This time in online format. We heard your cries from a lot of you out there who said, hey, we love your stuff, but we just can't make it to Chicago on a regular basis. So we're making it a little bit easier for you. It's going to be all online. It's going to be a great event, 4-hour extravaganza. It's going to be me and the boys from the Option Pit breaking down a lot of great options educational information. We're going to have it up on the website, theoptionsinsider.com/events, so you can learn more about the specifics and, of course, register for your seat. And if you do it in the next couple of weeks, then I'll even throw in a fun little extra. A lot of you guys have been asking what we did with the archives from that great event we did back in May at the SIBO, Unusual Activity, the first and only real event I've seen of its kind, really diving into the behind-the-scenes of the unusual options activity, how it works, what you do with that information, how you find it, all that great stuff. Well, we filmed the whole thing, we recorded the whole thing, and we have it all sitting there in a great archive, and we haven't released it yet. We haven't put it out for sale or for download or anything like that. But what we're going to do is, if you do decide to join us on this upcoming webinar, then I'll throw that in there for you as an added bonus for free. You'll get all the presentations, you'll get all the videos, you'll get all the radio, you get all that great stuff, a ton of content that would have cost you quite a bit if you came here in May, absolutely free, just for registering for this webinar. So surf on over to theoptionsinsider.com/events to learn more. On behalf of Alex and Mark and Uncle Mike and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing and, of course, for sending in such great questions. Keep them up, and we'll see you next time right here on The Option Block.
Become a part of The Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.